let's go to our first call of the day. We'll talk to John in Austin, Texas. How you doing today, John?
Way too good, Ken. Appreciate what you're doing. You do such a great job. This show is fantastic every day.
You're a good man, John. Really appreciate it. Thank you.
Live at TFNN, Breakout Investing, with your host, Ken Shreve.
Good afternoon, everyone. Happy Tuesday. Welcome to another edition of Breakout Investing on TFNN. Ken Shreve with you. You can catch my show 5 days a week, Monday through Friday, 3 to 4 Eastern on TFNN. Phone number to use, 877-927-6648. If you can't listen live, you can pick my show up as a podcast on iTunes. Don't forget you can listen to all TFNN programming on your smartphone. All you have to do is open your smartphone browser, type in tfnn.mobi, and you can listen to the stream that way as well. Don't forget about Tiger TV on the homepage of tfnn.com. Channel 1, the show is carried live. It is archived in Channel 13. With Tiger TV, not only do you get the show audio, but you get the video as well, so you can look at charts live right along with me. Finally, Tiger TV also viewable on your handheld device. To do that, just open your smartphone browser, type in tfnn.com. Over on the top right-hand side of the homepage, you'll see a box there with 3 mobile devices in there, and just click that box, and Tiger TV will start streaming on your phone. All right, we are up near highs, major averages on a shortened week of trading. Hope everyone had a great President's Day yesterday, so 3 trading days left in the week after today. Let's check in on the NASDAQ Composite to start. We'll see that the tech index is up near its session high, up a little more than 16 points, 0.5%, to 3208. Let's see how Apple is doing. See if Apple is leading the tech chart higher. No, Apple is still underperforming here. Down $1.29 to $458.87. I know one tech name that is fueling positive sentiment in tech. That would have to be shares of Google. Google having another monster day. Very extended stock here. Can't touch it up here if you're looking to buy Google for the first time. This is just one of many examples in the market now of what an extended stock looks like. So you don't want to be chasing Google up here, but it is outperforming. It is comfortably above the 800 level, up $12.31, 1.5% gain to 805.20. No specific news that I could see, but it's been an interesting run for Google. Back in late December, early January, it was a stock that tried to break out over the 738 price level. That was I think 738, that was its swing point right in this area here. You can see the breakout just immediately fell on its face. It came down to its 50-day moving average, and then a big gap up for the stock on January 23rd when it cleared a swing point of 745. That was after it reported strong earnings. It basically has not looked back from that gap up on January 23rd. So big day for Google, fueling positive sentiment in technology. Checking in on the S&P 500, we'll see that it is also up near its high here, up 9.5 points, 0.6% to 1529, and the Dow Jones Industrial Average also up near its session high, up about 48 points, 0.3% to 14,029. So market continues to look pretty good here. Really, I'm looking at the next catalyst for the market. I know we have the sequester that's set to kick in on March 1st, the automatic spending cuts that are going to kick in. That potentially could fuel negative sentiment going forward, but I think the real thing the market's going to be focusing on in coming weeks, over the next 2 to 3 weeks anyway, is going to be a avalanche of retail earnings. We are pretty much at the end of fourth quarter earnings season, but a lot of these retailers keep slightly different fiscal years, so we still haven't heard from a lot of the nation's retailers. Later this week we're going to hear from Walmart on Thursday. Remember, late last week, an internal email surfaced at Walmart where an executive sent an email to other Walmart executives saying, don't know if you've noticed, but sales so far in February look really, really bad. And, that was, Walmart came out with a statement saying that it was taken out of context. A lot of people I'm talking to wouldn't be surprised if this actually were the case, because we had that payroll tax take effect, and you look at the general demographic that Walmart serves, middle income, lower income. It's possible that people are spending less at that store. So, but what Walmart says, could move the market. And again, we're just going to hear from a lot of retailers over the next few weeks. And I'd like to think that the earnings are going to be great and the outlooks are going to be rosy, but there's a pretty good chance that it may not be. Just in terms of how strong is the consumer, high unemployment, how is that going to weigh on the economy? So, hopefully the earnings reports in the retail sector will be good enough to fuel more buying in the major averages, but we'll have to wait and see. I've been playing more defense than offense lately when it comes to the Ultimate Growth Stocks model portfolio. We're currently long 7 or 8 names, but have been taking some money off the table recently. And still willing to give our better performers room to work, but taking profits in some cases. So the story remains the same. The growth screens really are showing me right now a lot of extended stocks, a lot of stocks that have been, many that broke out in early January. The financials, we could take a look at some of these financial stocks. I mean, a name like Goldman Sachs, its move has been incredible. You had a picture-perfect breakout back in, I think January 2nd was the day that Goldman Sachs broke out, the day that a lot of stocks started moving. But you had a breakout on January 2nd over a swing point of around 129.72. This was the breakout day right here, and it's just been a straight move up. So Goldman right now trading at 158.07. Its 50-day moving average is all the way down at 137.32. So we can look at a chart of Goldman with the 10-day, 20-day, and 50-day moving average plotted, and that's going to show some near-term support levels. You can see Goldman still trending above its 10-day moving average at 153. Its 20-day is at 150, basically, and again, the 50-day moving average at 137. So the financials, very extended. You look at these charts, you say, yeah, they could very easily be ready for a pullback here. Bottom line is that they are, not breaking through any near-term support levels. So the trend is upward until proven otherwise. Health insurers in the news today after Humana said the government's proposed payment rates for Medicare Advantage participants, this is for 2014, basically going to be lower than expected and would crimp profits going forward. So Humana gets about 2/3 of its 2012 revenue came from Medicare Advantage. So it was the health insurer that hit the hardest on today's news. We'll take a look at Humana and see shares down to 6.2% to 73.12. It is trading up near its session high after hitting an intraday low of 69.78. But other health insurers under pressure, not as much selling pressure, but still under pressure. Here's United Health hits a low of 54.04. It is now trading at 56.58, up near its session high. You've got Aetna, Cigna. Let's check in on those two. AET would be Aetna. All showing the same type of action here. Early weakness, have rallied, are trading near session highs, still lower. Aetna down 1.2% to 48.59. Nice, comes down to its 50-day moving average, bounces, so good technical sign there. And finally, Cigna would be CI. Cigna, probably see a stock trading near highs as well. Yep, Cigna comes down to its 50-day, bounces, only down about 1% right now to 60.48. All right. I didn't get a quote on the U.S. dollar index, but let me grab that real quick here, because we've been watching the U.S. dollar. Last week it did break out over a descending trend line, but the dollar under a little pressure today at 80.48 is the last trade in the U.S. dollar index, down about 0.1%. Take a look at that U.S. dollar index here, and you'll see the descending trend line that it broke out over last week. So it closed Friday at 80.58, and right now it is at 80.48, so down about 10 ticks. Still think that 200-day moving average for the U.S. dollar index at 80.91 is most likely going to be resistance. You can see it was significant resistance back here in late December, early January. Remember when stocks popped and the market took off in early January? That was right around the time the U.S. dollar index really started to selling pressure started to increase in the U.S. dollar index. So we'll see if that 200-day moving average turns into resistance like it was in early January. April gold today down for 4 straight sessions here. April gold fell another $5.30, 0.3%, settles at $1,604.20 an ounce. GLD. See the GLD under some pressure today. It lower 4 days in a row as well, down 47 cents, 0.3% to 155.29. March crude oil up 80 cents, finishes at 96.66 barrel. I wanted to take a look at an interesting name in the oil and gas space. It is speculative. It is a small cap stock, but it is a high price stock. Geospace Technologies. This is a company that makes seismic equipment for the oil and gas industry. It has a market cap of, what was the market cap on GEOS? I think it was about $1.5 billion, thereabouts. 1.4 billion. Thinly traded with an average daily volume of 122,000 shares. But this thing is just acting so well. You can see the gap up for the stock. It was not last week, but the week before when they reported earnings, and it was a blowout quarter. Their earnings were up 150% to $1.70 a share. I think that beat the consensus estimate by more than 50 cents. Sales up 80% to 77.8 million. So it's a small cap name, thinly traded, but a company, growth prospects look pretty good here, and just a stock that, again, acting very well in this market. It's up another 5.4% today to 108.88. You can see by and large it tends to keep its price swings on a tight leash. 50-day moving average has been a good solid support level for this stock. Again, in the 50-day moving average for Geospace Technologies is 90.89 right now, so this one's all the way up at 108.88. So tough one to chase up here, but interesting company, strong fundamentals in the oil and gas sector. Headed into break number 1. Happy that you're with me. Thanks very much for listening. We'll be right back, folks. Breakout Investing on TFNN. Stick with me.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure, 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC. McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, everyone, to Breakout Investing on TFNN in the oil and gas sector. Before we went into the last break, just talking about an interesting name in the small cap space in the oil and gas sector. Geospace Technologies also continue to be encouraged by the way Cameron International is trading, ticker CAM, on the New York Stock Exchange. Company provides flow equipment products, systems, and services to the oil and gas industry, really holding gains nicely here. Like anytime a stock breaks out from a base and then starts to move sideways and hold near highs, that's generally bullish. It's up 1.9% today to 65.79. So like the way that Cameron International is trading here. Bond yields higher today again as money comes out of bonds and moves into stocks. The yield on the 10-year note up to 2.03%. 30-year bond 3.2%. Economic data today, well, we didn't have much. We did get new builder confidence data from the National Association of Home Builders Housing Market Index. The index fell slightly to 46 from a reading of 47 in January. A rise to 48 was expected. The new data come ahead of housing start and building permit data tomorrow. So keep an eye out for that. Housing starts are expected to decline 4.2% from December to 914,000 units. We're also going to get the producer price index. Excuse me. Also going to get the producer price index on Wednesday, and the minutes from the January 30th Fed meeting. On Thursday, weekly jobless claims, consumer price index, existing home sales, and the latest reading from the Philadelphia Fed. That would be a The February reading expected to come in at a reading of 1.5 after minus 5.8 in January. Taking a look at some earnings reports today. Let's start by taking a look at American Woodmark. Probably not a widely known name in the housing space, a company that makes kitchen cabinets and vanities for the remodeling and new home construction markets. Big move for American Woodmark today, up 10.5%. Impressive move to 35.10. They earned 14 cents a share. That reversed a year-ago loss. That was much better than the consensus estimate of 5 cents. Sales up 26% to $151.4 million. That was about $11 million above the consensus estimate. Nice breakout earlier this month over 29. You see a nice base breakout here. Comes down to its 50-day moving average, breaks out, moves sideways, and a big move today. So, nice move for American Woodmark. Tomorrow, before the open, we're going to hear what Lumber Liquidators has to say. Lumber Liquidators, longtime leader, was some sellers in the stock on Friday, more sellers in the stock today, but it is trading in the top half of its range today after early weakness. It is down 20 cents right now to 61.99. Lumber Liquidators operates hardwood flooring stores. Very good fundamentals here. They're expected to earn 42 cents a share. That would be up 40% from a year ago. Sales up 13% to $197.8 million. So Lumber Liquidators out with earnings tomorrow morning before the open. Another stock here, obviously a very risky buy ahead of earnings. Wouldn't be surprised to see a decent quarter, but again, it's a stock that is extended, headed into earnings, and there were some sellers in the stock Friday and some more sellers in the stock today. Also, Wednesday before the open, we're going to hear from Toll Brothers, luxury home builder. The results from the home builders have been sensational. I mean, you're seeing big bottom line and top line growth. Kind of skittish action in the home builders as a group overall today. A lot of very similar price bars today. Toll Brothers down 14 cents to 36.94 ahead of the results. They are expected to earn 11 cents a share compared to a loss of 2 cents in the year-ago quarter. Sales up 56% to $500.6 million. So wouldn't be surprised to see nice numbers from Toll Brothers tomorrow morning as well. Some other earnings reports. Remember Yandex kind of making a case it was going to report nice earnings. Stock had been in rally mode. A lot of good news got priced in pretty quickly. Really tough to get a read on a stock. You know, you see plenty of stocks acting well, not showing anything in the way of sell signals going into an earnings report, and then the stock falls apart. You see stocks that are acting very poorly ahead of earnings, and the stock takes off and goes higher. So playing a stock very close to earnings is risky business. When we come back, we'll talk about Yandex. This is a Russia search firm. They talked about slowing growth, generally not a good thing. So we'll talk about Yandex when we come back. Breakout Investing on TFNN. Stick with me, folks.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
Major averages hanging in there as we head into the close here. A little more than 25 minutes left to go in Tuesday's session. Right now, the Dow trading at 14,023. Up 41 points on the session. S&P 500 outperforming, up 8.5 points, 0.6% gain to 1528. The Nasdaq Composite up 15 points, 0.5% to 3207. Remember, Friday options expired, so volume on the New York Stock Exchange tracking much lighter than what we saw Friday, which was 932 million shares. Right now we're tracking about 25-30% lower than that today. NASDAQ volume on Friday, 1.84 billion shares. We're tracking about 2% lower than that today. So conviction behind the buying today? Probably not, but this is a market up. This is a market that is whose uptrend is upward. Whose trend is upward until proven otherwise. We've been kind of, slamming that point home in recent weeks, but that is the case. I do have some concerns about the market, but to argue with the market and to start going short with index ETFs before the market tells you to do so, that is a risky strategy in my book. So going to wait for some sell signals to arise, and again, the sell signals will arise when major averages start to fall, and there's volume expansion to the downside. In other words, you see a percentage decline of 0.5%, 1%, 1.5%, and you see volume come in quite a bit higher than the prior session. That's distribution. Headed into today, the S&P 500 had only shown 2 higher volume declines in recent weeks. That's just not enough. That's gonna bother the market. The other thing we've been talking about, what I mentioned in my weekly update earlier today, the Ultimate Growth Stocks newsletter weekly update. So not only do you have limited distribution in the market, but you've also got market leaders out there that by and large are acting well. I can really just think of 2 stocks out there that are showing kind of wishy-washy price action. One would be Amazon, trying to hold on to its 50-day moving average here, but even Amazon hasn't been trading great recently. You can see it's still holding above its 50-day moving average. So this is a stock that recently tried to break out over the swing point of 263, ran up to 285, and then boom. I mean, the sellers just really came into the stock. So I was expecting Amazon to, show some the ability to outperform. So far, it hasn't done that. And then another strong performer has been Stratasys, but Stratasys really has been under a lot of pressure. This is in a market that's under distribution. You tend to see a lot of growth charts that look like this. Right now, you'd be hard-pressed to find high-quality growth names that have given up their 50-day moving averages in heavy volume. There may be some out there, but they're the exception, not the rule. So Stratasys right now up 1.4% to 69.58, but its 50-day moving average is all the way up at 79. So Stratasys definitely has shown some technical damage of late. 3D Systems, a different story. Still looks a bit vulnerable here. Came down to its 50-day moving average earlier this month. Found initial support, rallied back to that 67.50 price level, and has fallen back to 59.90. Its 50-day moving average is at 57.95. So it's about 2 points above that 50-day line. And we have earnings reports. 3D Systems comes out first. I believe February 25th is the earnings date, and then Stratasys on March 4th. So still going to wait to hear from the 3D printing companies. All right, I mentioned, let's get back to Yandex, because that was a stock that had been trading fairly well headed into earnings. They made 29 cents a share. That was up 45% from a year ago. Sales were up 44% to 288.7 million. Yandex, you have Baidu that does search in China. You've got Google that does search in the U.S. You've got Yandex that does search in Russia. And Yandex, I think an IBD article said today that they control over a little bit more than 60% of Russia's search market. The company said its revenue growth in 2013 is likely going to slow to a range of 28 to 32% this year from 44% growth in 2012, and that has brought sellers into the stock. It is down close to 10% to 23.07. Again, you look back in recent quarters, you see great growth on the top line, great growth on the bottom line, and really good growth prospects going forward. Right now, the Thomson Reuters consensus estimate is for profit of $1.12 in 2013. That would be up 33% from 2012, and then 2014 earnings of $1.43 would be up 28% from 2013. So there is a growth story going on there, but if there's any hint that growth is slowing, that does appear to be the case at Yandex. That is generally going to hurt a higher beta, higher multiple stock like Yandex. Big star of the day in the restaurant space. Definitely want to take a look at Red Robin Gourmet Burgers. Not a restaurant that we talk a lot about on Breakout Investing, but my, oh my, what a bullish move for the stock today. How about a 20.6% gain for Red Robin Gourmet Burgers, up $7.52 to $43.97. $43.97 last price for Red Robin Gourmet. This is a stock that just would not be appearing in my screens because the earnings growth, the sales growth, everything about it is just kind of lackluster. Not a fast-growing restaurant by any means. Very speculative stock. Market cap even after today's huge move, is 640 million. Not the most liquid of stocks either. Average daily volume of about 141,000 shares. But the numbers this time around were pretty darn good. Revenues up 17% from a year ago to 240.7 million. That was nicely above the consensus estimate of 232 million. They made 59 cents a share, up 111% from a year ago, and that was 15 cents above the consensus estimate. So fairly high short interest should be noted in Red Robin Gourmet Burgers. You see a percentage gain like this, obviously some shorts running for cover here. But this one had a days to cover ratio of 12.7, which is actually on the high side. The days to cover ratio basically looks at the entire short interest of the stock, whether it's 1 million shares, 2 million, 3 million shares, however many shares are held short total, and they compare that to the stock's average daily volume. So, Red Robin being a thinly traded stock, a lot of shares held short when compared to its average daily volume. So a days to cover ratio of 12.7 days means that it would take 12.7 trading days based on its average daily volume of 141,000. It would take 12.7 trading days to cover the entire short position. But volume very heavy in Red Robin Gourmet today, 1.2 million shares. So most likely seeing some short covering today. We also heard on the earnings front from Wabtec, W-A-B. This is a company known as Westinghouse Air Brake Technologies. It's a big, long name, but anyway, they provide they make equipment for locomotives, freight cars, passenger transit vehicles. Nice numbers. Another extended stock that's getting more extended after today, up 4.2% to $99.49. They made $1.34 a share, up 40% from a year ago, 3 cents ahead of estimates. Sales up 14% to $610.4 million. That was slightly ahead of estimates as well. So good day for Wabtec. And then chemicals company Westlake Chemical, kind of not doing much here, just holding near highs, similar to the major averages. Not really moving, though, up 65 cents to $92.48. This is a company that makes basic chemicals, polymers, fabricated plastic products for consumer and industrial markets, and they made $1.42 a share, which was 20 cents better than the consensus estimate, up 255% from a year ago. Sales of $801 million were down 7% from a year ago, and also well below the consensus estimate of $832.7. Stock is kind of unfazed on the revenue miss, up 0.7% to $92.48. Wanted to check in also on shares of Intuitive Surgical. We already heard from them in terms of earnings. In fact, we had a big gap up for ISRG when it reported outstanding results. You had a big breakout for ISRG in late January. This one is getting interesting here. 2.3% gain today to 582.34, and what you have here is a stock that is approaching a swing point of 585.67. 585.67 is the swing point, so it just has a little more than 3 points to go to get to that swing point here. Again, another gap up that, the stock was just acting strong after the gap up, moving sideways, not giving up any ground. Volume isn't huge in the stock today. Intuitive Surgical normally trades about 450,000 shares a day. It has only traded about 203,000 shares right now, outperforming nicely, but not much juice behind the move. But it is flirting with a breakout over a swing point of 585.67. So definitely one to keep an eye on. How about this move in GNC? GNC, this is, seems like ages ago when we held this stock for the Ultimate Growth Stocks model portfolio, but we've been out of it for several months. Reported earnings last week. This was a $36 stock last week, and now it is at $42.38. So 3 days in a row of big gains, up another 4.4% today to $42.38. Late Friday, it was disclosed that SAC Capital Advisors, Actually, they disclosed a 5.2% stake in GNC Holdings. As its name indicates, GNC operates the GNC Nutrition stores, and earnings pretty good last week. That's what initially started the upward move in the stock. Earnings were up 11% to $565 million, and actually sales were up 11% to $565 million. Earnings up 43% to 50 cents a share. So buyers continue to make their presence felt in GNC. The China casinos. Let's take a look at Wynn. At last check, this was under quite a bit of pressure. Holding its 50-day moving average, though, so that's a good thing. If you're long Wynn, you want to see it hold the 50-day line here, trading up near its session high, but still down 2.3% on the day to $120.17. Nomura came out today with a note saying that gaming revenue so far in Macau in February suggests that revenue for the full month will be at a low to mid-single-digit clip. That's well below the forecast for a growth rate of 10 to 15%. So it looks like some sluggish activity in Macau. That is where we're weighing on shares of Wynn. Most likely doing the same for Las Vegas Sands. See LVS also getting very close to its 50-day moving average here. LVS down 3.1% to 51.24. We heard from data center operator Equinix last week, and earnings were actually very good on Thursday, fueled a big move for the stock. Actually went over 230 for a little while, but sellers have been in the stock the past 2 days. It is down another 2.1% today to 219.84. So this is, not the best action to see so soon after a breakout. Some sellers in Equinix. You had a breakout over 226 last week, but again, 2 straight days of selling in Equinix. Haven't mentioned the Office Max Office Depot merger or proposed merger. There's Wall Street Journal reported that both companies are in advanced talks to merge. Office Depot is the bigger company with a market cap right now of about $1.5 billion. Office Max not that far behind at $1.2 billion. Let's take a look at both stocks here. First, we'll do OMX. That would be Office Max, and we'll see shares gapped up today, up 21% to 13.02. And Office Depot also having a good day, up 8.7%, but boy, it hit an intraday high of 610, now trading at 499. So that's a pretty big percentage decline off its high for the day, but still up 8.7% to $4.99. Staples, still a publicly traded company, SPLS. So see, Staples at last check was also trading higher on the news, and big gap up for Staples as well, up 13.3% to 1467. So we'll see. I should know this, but one of these stocks is reporting earnings on Thursday. It's either Office Max or Office Depot. I will let you know which one when we come back, but we're headed into the final break of the show. So stick with me. We'll finish up our talk on Office Max and Office Depot. Also talk about some earnings reports due after the close in tomorrow morning. We'll do that in about 3 minutes. Breakout Investing on TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91, and only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just 1 position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Welcome back, folks, to Breakout Investing. Let's check in on the markets one last time before we put the finishing touches on Tuesday's session here. NASDAQ Composite still acting strong. Yeah, the volume in the NASDAQ not great today, but it looks like it's going to come in lower than Friday. But at last check, actually tracking pretty close to Friday's volume of 1.84 billion, so not bad. NASDAQ Composite right now up 19.5 points to 3211. S&P 500 also acting well, up near its session high as well, and it is trading up 10 points, almost a 0.7% gain to 1530. And finally, the Dow holding gains, trading near session highs as well, up 52 points to 14,034. So it looks like a good close for stocks here. And I did want to check in on a couple of earnings reports after the close today. First of all, let's check in on CF Industries. CF Industries, not really a leadership stock at this point. The fertilizer company that makes nitrogen, phosphate fertilizers, holding on to its 50-day moving average here, though. So finding initial support at the 50-day line. CF Industries up 0.8% to 218.31 ahead of the results. Earnings expected to fall 2% from a year ago to $6.97 a share. Sales down 8% to $1.6 billion. How could we not mention Herbalife, one of the most polarizing stocks on Wall Street? They're going to be out with earnings after the close. Earnings up 20% to $1.03 a share. Sales up 19% to $1.05 billion. Bill Ackman from Pershing Square talking about HLF being a pyramid scheme. Carl Icahn recently took a 13% stake in Herbalife last week, so the battle goes on about whether this is a good stock to be long or short. But say one thing about Herbalife: it does have a very consistent, steady track record of earnings and sales growth. Tomorrow, we're going to listen to Tomorrow Before the Open. As a matter of fact, SodaStream is going to be interesting. Again, another nice setup here ahead of earnings. Doesn't mean you go out and buy the stock ahead of earnings. That's basically just rolling the dice, and you got a 50-50 chance. Either the market's going to like the results or it's not. But the technicals look pretty good here. SodaStream up 1.6% to 51.93. Again, they report tomorrow before the open. Look for a profit to be up 19% from a year ago to 38 cents a share. Sales up 41% to $121 million. And SodaStream is you can make that soda at home. And it's kind of a cool product. I don't own one, but know people that do and say it's a pretty cool product. Finally, after the close today, Grand Canyon Education. Not that many school stocks that pass muster in my fundamental screens that I run, but Grand Canyon Education, probably best in breed at this point. Stock's up 1.8% to $25.49 ahead of earnings after the close. Look for profit of 42 cents a share, up 24% from a year ago. Sales up 20% to $136.1 million. Again, in terms of economic data that we're going to be paying attention to tomorrow, we've got housing start building permit data for January. The producer price index, latest reading on wholesale inflation, will also be out tomorrow. And the minutes from the FOMC meeting on January 30th will be released tomorrow. Coming up next, the Tom O'Brien Show. Don't forget, you should listen to Tom every day, but today he's got a special guest, my good friend Steve Rhodes, who's going to be offering invaluable market insight, I'm sure, alongside Tom. So stick around 4 to 6 Eastern for the Tom O'Brien Show. I'll be back tomorrow, same time, 3 o'clock Eastern, for another edition of Breakout Investing. Have a great day, folks.